Hey everyone, hopefully you're having a good day. My name's Andy. My channel is Finding Value. Today I'm going to go over an overall market update. We're going to look at some things like the CRB index. We're going to look at the overall markets. The thesis of the channel, what I laid out 2020. I think that's when I started the channel in 2020, August 2020. And I was a big commodity, well, I am a big commodity bull, big precious metals bull. What I said in the beginning of this channel and the thesis of the channel was that we are going to see inflation. The inflation starts with the housing starts in the real estate market. It's going to be loans coming into the system, new loans against new homes at a greater volume of housing starts. We are seeing that. It's playing out exactly like the thesis has described. That volume and inflation is going to impact interest rates. They're going to raise interest rates. That interest rate is going to rotate money away from certain sectors into other sectors. The sectors that the money is going to rotate into is precious metals, commodities, and anything in real estate. So those three sectors are going to do very well. I also think that emerging markets and some other currencies denominated outside of dollars will be the next spot to be. I think the dollar will eventually see weakness, and then I think interest rates will go up. So we're going to see money rotate out of dollar assets, which is going to put pressure on the dollar. So we're going to see people selling their dollar assets, going after other assets, commodities, precious metals, emerging markets, real estate. Those are the ones. What are the highest leveraged ones? Energy. Energy is a big leverage move. Oil and uranium in particular. So I'm heavily in those, and I do like precious metals and some of the mining companies. More specifically, the royalty companies that I really like. So I'm going to go over the overall market here. What we should see, commodities strong, overall stocks like technology stocks and overall stocks, S&P 500, we should see it weak. So that's the thesis of the channel, and that's what we should be seeing and playing out. We're gonna literally draw currency from those areas and put them into commodities and precious metals. So here we go. This is the overall market. I've got the dollar up here. The dollar has remained strong in this, I call it, transition period. I am looking for this dollar index, even the dollar index, to get weaker eventually. We do have a lot of inflation around the world in other currencies at this time. This is a measurement of relativity, not an absolute strength. So it's relative against other currencies. So we could go sideways for a little while and then see weakness later. I'm just guessing that this is going to get weaker and that we're going to see people selling dollar-denominated assets because of interest rates rotating money. One thing I do want to say is everybody's been pinned into dollar assets in the entire world. The dollar's been stronger on a relative basis. You can see that in the short term here of that thing going up. That's the dollar index. All other people in other currencies they'll favor dollar-denominated assets. But when interest rates go up, what's going to happen is it's going to rotate all that money into something else. This is going to be a huge bull market, I think, in commodities, precious metals, and all that. It could be some of the biggest bull markets that people have ever seen in their life, unless you were living in the 1970s, which I think will be a very similar bull market coming up, potentially. We'll see. I don't want to call it yet, but we could see a very big rotation of money out of assets because of the interest rates and how long we've been how low the interest rates have gotten, how long they've been there, and how much money has gone into those assets, creating the largest distortions in the market. Those distortions were created because of interest rates being so low for so long. And if we try to reverse reverse the interest rates, when the interest rates go up, it's going to reverse the money flows back out into commodities, which then money is going to seek all of these commodities, which is going to put a huge inflationary boom into play from an investing standpoint, and we haven't been investing in it. So there's been a whole bunch of ramifications for pinning everybody into stocks and having such a low downward period in real estate in a recovery phase of real estate, and how low it's gotten and how long we've been in it. It's caused, I think, problems and distortions in the market that have probably never been this large. And we're going to see this all unwind. And being part of the channel, guys, subscribe to the channel. watch this stuff unwind, and I can show you the beauty of all this. It's going to be fun. But here's the dollar. We've got the 10-year yield that's going higher. This is our, all the other markets are basically a derivative of the interest rate. And when the interest rate moves, what it does is the interest rate prices all assets. It's used in net present value calculations. So if you look at all these different calculations that people use, it's all based off of the interest rate. And if the interest rate moves on up, it changes the values of all of these, the net present value of all these different growth stocks and stocks. So as interest rates go up, what you're going to see is you're going to see the principal, you're going to lose money on bonds. The principal holdings will go down. It will go, you will start losing money. It's not just losing purchasing power, you are losing money. And then in stocks, all of your valuations will change and money's going to rotate out of those two sectors. And that's what we're going to see, I think. So when interest rates go up, and this isn't going to just be a straight shot, guys, you're going to see this kind of cycle up and down. It's the way markets work, but this is going to cycle upward. And what you're going to see is you're going to see the CRB index start to rocket higher because this is where the money's going to rotate into. We're going to see these big patterns all starting to break to the upside where we're going to have big old runs. And I think what's going to happen is we're going to hit the high here, and then we're going to have another run on top of it. That's my guess. A big run. It's going to be a big fat run. Super mega bull run. How about that? Just put more stuff in front of it, and it sounds better, right? So I think we're going to see that run. Now, if I go on down here, we've got crude oil. Another commodity here. Let me get off log. This guy's breaking higher. This thing looks fantastic for a big move. I don't want to start talking about it. I'm going to get too bullish, so I'm going to back off. I don't want to be too super bull on here. Moving on down here, we've got the CRB index to S&P 500. I'm just going to scroll in here. Let me do a 5-year. This is moving on up. What we're going to see is that we're going to see the CRB index start to outperform the S&P 500 in greater and greater quantities. This is a new uptrend. So what we did is we've broken this downtrend here. We've got this nice rounding bottom starting to come on up. We're starting to see buying, what I call it is buying pressure. We're starting to see the up movements greater than the downward movements, which means we're moving into a new era of people preferring commodities over stocks. We're starting to see the commodity outperform stocks. We're in a new uptrend. We have a higher high and a higher low that we've broken this. So this ratio is going to, I think, start to accelerate to the upside, and we should see the commodity index, which I just showed you, accelerate to the upside. Which this is the CRB index starting to accelerate to the upside at the same time that the S&P 500 is going to start going down. We are coming down here. We've got two little up days in this big sell-off day, and we're putting in another bullish or bearish engulfing, which means we're going to head lower. I am calling a top with this bearish engulfing pattern here, the break of this large rising wedge. And this thing looks absolutely stupid when you look at it from a long-term perspective. This is a logarithmic perspective here, and we're just leaking out over. Looking at the 1 year, you can see that we've got larger selling pressure. We have a return move. We're coming back, and I think we're going to see a sell-off here. If interest rates continue higher, this move will continue lower. So I think that we are coming into a period where stocks are going to pull back, and we are potentially going into a longer term period of a decline sideways movement. And I don't know how far this is going to pull back. I wouldn't necessarily be betting against it because they have a printing press that can print unlimited amounts of money, and these are still assets. They're just overvalued. So either they go down with the dollar remaining robust, or the dollar value goes down and these go sideways and the value gets sucked out of it and transferred to something else like commodities or precious metals. We are also seeing the same type of pattern and movement in the US Composite Index for the Nasdaq. This is one that also looks like it is peaking. It's an overthrow with a bearish engulfing pattern, another bearish engulfing pattern, big, large selling pressure, weak move up with another large move down. I do think that this is looking quite toppy, and I do think that we're going to go into a period where we go lower to sideways over a period of time. And this looks like we've broken to the downside. It looks quite obvious to me that we are potentially heading a little bit lower. And I don't know why I have this line in there. Let me delete this line, guys. There we go. Chipotle coming under a little bit of pressure. Just kind of looking at some stocks. We're coming on up. Again, we've broken to the downside of this long-term trend. I think that overall, money's going to rotate out of these types of companies and into commodities. So that's a downtrend or an uptrend line break. Apple's starting to come under pressure as well. I think this thing is rolling over, and I do think that we are going to be looking for a top and a potential move lower. Amazon, again, we're getting sold off. We have a return move here. So we've broken this pattern to the downside, return move, and then I'm looking for a move lower. Now, again, I would not short these things. That's not my play. I'm going into where the money's rotating. Now, this could go down and go sideways for a while. Doesn't mean that it's going to just drop lower. And Amazon, it is a great company. It does make money. I would definitely look for weaker companies to short if you are going to short things. Facebook's gotten its face ripped off to the downside. So that's the book that I see in Facebook is a ripping. Alphabet, you get this kind of roundish top that I put in. It came down, it pulled back up with some earnings, but it's still selling off. Why is that? Higher interest rates. I still think the pressure is going to be to the downside. Baidu, this guy's in more of an emerging market, so I don't think I would be bullish on this, not bearish. Visa, I would say, is probably looking a little bit heavy on the top end, like it wants to roll over. A rising wedge broken to the downside, and we're starting to come back up, and I think we'll see this roll over to the downside eventually. MasterCard, it's got this broadening, like megaphone type pattern, just moving sideways. We have a bearish engulfing. Bearish engulfings usually resolve themselves lower. The trade desk heading lower today. This thing had a little overthrow top, and then I think we're probably just going to roll over and probably try to retest this resistance line and see where we go from there. Roku is already heading lower. It's broken out of its lower trend line and to the downside. Zooming in on it. Yeah, a little bit of wicks at the top. Doesn't look horrible, but doesn't look great down here. And that's what we've got for the overall stocks there. The housing markets, we're at 1.7 million home starts. This is kind of the big long-term view. This is what's driving all of this. Back in the 97, 98 timeframe, I would have been a buyer of commodities for these next couple of years. And this was the inflationary period with the housing starts going up. Then we had a crash when we went below it. 07 is when I would be like, well, this thing's probably done for very soon, and it crashed in 08. So whenever we go below the average in home starts, that's when things start to wind out. You get about a year or two notice before things start getting really ugly. And we're into an expansionary phase coming up, which means inflation's going to kick up here already, and that commodities are going to start to really take off. So everything's in alignment, guys. Everything is in an alignment. And the overall market, we're going to start seeing stocks, I think, kind of roll over like we're seeing. And that money's going to rotate over into commodities, precious metals, and real estate. I think real estate's going to remain robust. I think real estate's going to go higher. I think that commodities are going to do very well along with precious metals. Precious metals are just going to they're going to get heated up here soon. Again, we just broke out with gold to the upside. We're going to start seeing commodity ratios. We're going to see, let me pull up the Dow Jones Industrial Average to Gold ratio and show you guys here, because this is kind of an overall market. This is also rolling over to the downside, which means that gold's going to outperform the Dow Jones Industrial Average. So it's a big move lower here. So the ratio is telling us that we should be getting long in gold and commodities we should already be long in gold and commodities. And using your housing starts as our leading indicator would have already told us this. Or you can go to Finding Value Finance's channel, and I can tell you this because I kind of pieced this all together a while back, and I was talking with some friends at work, and he's like, "Dude, you need to start a YouTube channel like all these guys that," because I was saying that a lot of guys are wrong. They're just flat out wrong. They don't know what they're talking about. They haven't run, any analysis on it. And the analysis that I've run on is exactly what I've described in the thesis of the channel. So if you guys believe in the thesis, if you've been on the channel for a while, you probably do. What I do is I get long. I stay long in the companies. I do not trade in and out. I accumulate. I buy the dips for the bull market. That's what called buying the dips is. But you have to understand what the market conditions are. If you get the market conditions right, you buy the dips. You do not sell the rips. You hold the rips. You buy the dips. And then you ride it the entire way up until the market conditions change. Your selling point is your ratios getting expensive and the market conditions ceasing to exist in the housing starts. It's that simple. This will make copious amounts of money. Copious amounts of money with the least amount of risk, with the least amount of stress, and the least amount of everything. So it looks like everything's playing out the way that the thesis is. Gold and commodities will outperform, and then stocks will underperform. Now, is this the ultimate top in stocks? I don't know. I don't want to say that it is. It's very hard calling tops, very hard calling bottoms. Sometimes these things can go a little bit longer than what people think. But I'm long in commodities. I'm not worrying about shorting anything. I'm not doing any of those sorts. I'm staying long. I'm being long, and I'm riding this stuff higher. If you guys like this, thumb up and subscribe to the channel if you haven't already. Thank you for listening. This is Finding Value.